Hello, I'm Tylah Tully and today I'm joined by Maronan Metals Chair Simon Bird. Simon, you've released a preliminary economic assessment this week on the starter zone at Maronan's namesake deposit. What were the highlights of this study?
Hi Tyler, thank you for having me again. Glad to be back and delighted that we've been able to release the study that I mentioned last time we spoke. We promised to have it out by the end of this quarter and delighted that we released it earlier this week. Look, the study, I think, speaks for itself, but I'm happy to take you through what I think are the highlights of this study. The main thing to note is that the preliminary economic assessment is based only on 15% of the global Maronan resource, and the outcome is strong enough to demonstrate that we're set to become one of Australia's largest silver producers because of the compelling economics and the clear growth opportunities. The study specifically covered two scenarios or two options. First of all, we looked at the opportunity to build a plant on site, processing plant on site. And secondly, we had a look at the potential for toll milling at a nearby facility. Both these options demonstrated strong economic returns, and both options are based on the same 10-year underground mining plan, which will be producing over 1.2 million tonnes of ore per annum. And out of that, producing the equivalent of about 5.5 million ounces of silver equivalent per annum. Now, our preferred option is the standalone plant on site. The reason for that is we're confident that this starter zone is only the beginning and the ore body will continue, and given the recent infill drilling where we managed to convert 98% of inferred resource into indicated, we're confident that we'll be able to keep going with that and continually extend the mine life and the mineralisation. So this standalone scenario sees a requirement for pre-production capex of 266 million and assumes all-in sustainable costs of $30 an ounce silver equivalent. From that, the outcomes of the study demonstrate that we've got an NPV at NPV 8% discount of $377 million and an IRR of 37%, ensuring a payback of 4 years and a life of mine EBITDA of just shy of $1 billion. So outstanding results just for that small starter zone. The other scenario was the toll treating. With the toll treating, this provides excellent optionality for our project because we can do toll treating, as I said, at a facility nearby. And not surprisingly, the economic outcomes are very similar, albeit a slightly lower NPV, substantially better IRR, much improved payback of 2 years compared to 4, and it also has, not surprisingly, substantially less capex, in the order of only 98 million compared to the 266. So we're delighted that we've got this study out. We can now talk to people about the economics, and it clearly shows we have a line of sight to turning this 40-year-old discovery into a mine, even though we've only been working on it for 3 years since we listed.
One of the main themes of this study was the additional upside at the company. Walk us through why the starter zone is only the beginning for Maronan.
as I mentioned, it's only 15% of the overall global resource of this project. We're only going to be mining some 8.3 million tonnes of a 65 million tonne resource. So it is only a small component. That leaves just under 26 million tonnes of lead-silver mineralisation outside the starter zone, and some 30 million tonnes of copper-gold outside. So that provides tremendous growth potential. As we progress through the starter zone, we will be extending the area that we can share economics about. So as we do further infill drilling, we will be updating or feeding that into our financial assessment and showing that there is excellent growth potential. The other thing to bear in mind is that our team are confident that we've based this study on 1.25 million tonnes a year throughput. But once we get started, there's no reason we can't substantially increase that. And much of this study has envisaged that potential down the track. So certainly some good upside ahead of us.
So what was the market's reaction to the study? Are people realising the potential of this deposit, and do you see a positive investment environment for this project?
Look, the macro environment for silver remains strong, and we talked about that last time. Silver prices and silver sentiment remain strong, so not entirely surprising that the market response has been positive since we put the release out. But the feedback has been better than that, and it actually shows that people do recognise we have a very robust project here, and it is also recognition of the quality of the study that our teams put together. I mentioned before that this study, I believe, exceeds your typical scoping study. It's very much on the road to a PFS or DFS. Furthermore, with the current sentiment, I think what's happened here is that investors are now aware of how leveraged our project is to the silver price. So over half of the revenue from this starter zone project comes from silver. In fact, 53% of the revenue is silver alone. And if you have a look at our sensitivities, a 20% increase in the silver price will translate to close to 40% increase in our NPV. And in fact, today's spot price is some 20% higher than the price we used in our scoping study. So I do think that the market's recognised it, although I still feel that we are grossly undervalued.
So what do the next steps for Maronan look like from here?
Glad you asked, and it won't be a surprise that we know what we want to do next. There are 4 key areas. An obvious one is to continue the drilling to extend the mineralisation beyond the starter zone, because we know there's more there. So that's number one. The second one is pushing ahead with the definitive feasibility study and all the associated technical programs, many of which are already underway, including more detailed metallurgical test work. So that's the second priority. The third one is we applied for a mineral development license back in March. We're looking forward to securing the approval for that, which we anticipate this side of Christmas. With that in hand, we will then be in a position to start construction in the new year on a decline and that access in a decline to do to retrieve bulk samples, better understanding of the ground conditions, and more economical infill drilling from underground. The fourth, and by no means least, is we are already progressing discussions already in train with a number of parties for potential strategic partnerships and financing arrangements to make sure that we have mapped out how this project can be funded right through to production. And the exciting bit about that is here we are only 3 years after listing, and we can see the potential to have this project fully funded right through to production, which will see us achieve our primary objective, which was to convert this discovery into a mine and hopefully one of the largest silver mines in Australia.
Simon, thank you so much for your time today. We can't wait to see how the project unfolds.
Thanks, Tyler. Look forward to keeping you updated.
For more ASX news and analysis, subscribe below.